And number 10, and I think the most important, is failure to properly fund and maintain the plan. A special needs plan, which could include a special needs trust, must have assets to make the plan work. And there are a lot of different ways to fund the special needs trust. As I mentioned, we believe in funding it later in life. And one of the most efficient and effective ways to do that is by adding life insurance to your financial world to be able to eventually fund the trust, naming the trust as a beneficiary. And there are different types of life insurance that you could use. There's term insurance, which requires the least amount of cash flow. You pay an insurance company a certain amount of money for a specific amount of time, and then it ends. The challenge or problem with that is that it has a specific term, and it does end. And in our case, and in your case, we want to make sure that the death benefit that will eventually fund the special needs trust is going to pay someday in the future. It has to. You're planning for 2 lifetimes. So it needs to be, or a portion of your life insurance should be what we call permanent life insurance. Permanent meaning it's going to last forever. And it will pay, if properly designed, when you're 60, 70, 80, 90 years old. And finally, the plan should be reviewed on a regular basis to make sure that it continues to meet not only your needs, your loved one's needs, but also any changes in law or any changes in benefits that you may need to take in consideration. As you can tell, there are a lot of things to think about when it comes to planning for your loved one. A lot of times it can seem overwhelming. When we talk to families, the most important thing they say is that we really want to focus on creating a plan to protect the benefits that are going to be or are currently available for their child, and to be able to provide supplemental money sometime in the future.